minimum of $1,000 up to 50,000 on a soft pull. You'll know your interest rate, you'll know what you're approved for, and we're starting right now. So we're at the upstart.com website for the personal loans. We're going to be reviewing them, talking about them. Should you get them? Should you not? But before I get started, though, put it in the comments if this is your first time here. Welcome to my channel, where we talk about leveraging credit to create cash flow. We talk about business and we talk about finance. All right. So upstart.com. So I've actually had this loan. I got this loan. I got a loan, I should say, a couple years ago. This is an option if you're looking to get a personal loan, that it doesn't necessarily is directly correlated to your credit score. This is a fintech company, and basically, what a fintech company or what these fintech companies, they're using these algorithms. All these, let's just go here so they can better explain it than I can. So, Upstart, our mission is to enable effortless credit based on true risk. So, it's not necessarily your credit score. It's a combination of a lot of factors: employment, uh, your education, where you live. So it factors all these things, right? Because you might have bad credit at the time of applying, but you might have great income. You might have a great job. You might have bad credit at the time, but you have great education. You graduated from, as an example, Harvard or something like that. But so they factor all those things to really determine how much of a risk you are. It says it right here. Upstart is a leading artificial intelligence lending marketplace to design to improve access to affordable credit while reducing the risk and cost of lending for our bank partners, right? What they do is they use all these factors, they factor all these factors, right? Your education, your income, your location, things like that, your bank history. They're going to connect to your bank. They'll do their bank deposits and things like that, and then they'll determine how much of a risk you are to them, right? If you're borrowing money, you're a risk, right? Why? So they have to mitigate their risk as the lender. So they use all these algorithms to determine that. Now, the great thing about Upstart is that you can get pre-qualified through a soft pull, right? You would just apply. So you would go here, check your rate in 5 minutes, get funded in as fast as one day, 43% lower rates as compared to credit score only models. They have great Trustpilot ratings. Like I said, I got them years ago. I had zero issue. Very fair. I got a very fair interest rate at the time. I didn't get a big loan. And compared to other lenders like One Main Financial, they do not use One Main Financial. They are so predatory. It's insane that they are able to do business 35, 40. They're like 30% interest rates, 35 or 28. Like that, it's insane how they're allowed to get away with that. Flexible loan amounts, the minimum is 1,000 up to 50,000. Choose between personal loans, 3 to 5 year terms, fixed rates. Lowest would be 4.6, highest would be 36. If you do not get a personal loan at 36%, it's not even, to be honest, it's not even worth it at that point. That's just predatory, in my opinion. No payment penalties. What that means is if you have a 5 year term and you pay it off in 2 years, you don't get penalized for that. So that's always good to have. Some companies, some lenders do that. I don't think that should be involved. I don't think they should be able to do that. But again, it's all based on the algorithm. So what you would do is you would first put all your information, right? Put your loan amount, and then you're gonna put your income, and then it'll tell you why. Well, you're gonna have to put why you're borrowing the money, right? And how much would, and they're gonna ask you why you're borrowing the money, what the loan amount is, and then they'll do a pre-qualification, right? 99% of personal loans funds are sent within one business day after signing. So you get funded very quickly within 24 to 48 hours after you sign the promissory note. Now, what I found is, now this is, so the minimum federal credit score is a 580. So that's not a great credit score. Again, they're going to factor in your education, your income, and all these other factors, your location, and your bank activity to determine how much of a risk are you, if they're able to lend you out money and mitigate that risk, right? So obviously, the higher the risk you are, the higher the interest rate, and the less of the loan amount you're going to get it qualified for. But that's why this is good, because you get to see what you're qualified for, what the interest rate would be before it's actually a hard pull. It would be a hard pull if you accept the terms that they present to you. Now, these are some of the reasons you can select to get the personal loan. Obviously, you don't want to, what I don't recommend is loans for personal use, meaning if I'm a lender, I'm not lending money to someone who's trying to do a wedding, because that is creating debt by borrowing money to do your wedding, right? I would lend to someone who's trying to consolidate debt consolidation, or credit card consolidation, because the credit cards have usually higher interest rates than personal loans. So if you have 10 credit cards and you're trying to lower that interest rate, number one. Number two, you're trying to get a fixed payment. And what that will do is, if with a personal loan, it'll lower your utilization on the credit card side, and it'll actually increase your credit score. So I would loan to someone like that. But someone who's trying to go on vacation, someone who's trying to do a wedding, I would maybe a medical loan, because that, again, that's trying to consolidate the debt. But to create that, I wouldn't lend money. So you have to put yourself in their shoes. Why would I lend you money if you're literally just trying to create debt and not trying to save on debt or consolidate debt? So you have to put yourself in their shoes. Again, this is all about mitigating the bank's risk, the lender's risk. But the good thing is, they don't factor your score. They use it based on the algorithm, your bank activity, your education, your income, all these other factors. And then they determine, this is how much risk we can lend out. This is how much risk we think, as the lender, that you would pose to us if we lend you out this money. So, guys, let me know in the comments if you ever apply for this loan. What were the data points? And they are going to pull your TransUnion. So just keep that in mind if you apply for the loan. If you want to continue with the loan, they will pull your TransUnion. Let me know in the comments if you got approved for this loan. What were the loan amount? What were the terms? Don't get this loan if you don't have a plan to utilize the funds, right? I don't recommend, especially personal loans or installment loans, because you have to make that minimum payment the following month. You have to make that payment. It's a fixed term for 3 years. You have to make that payment every single month for the 3 years, or the 5 years, or the 4 years, or the 2 years, whatever it is. It doesn't fluctuate. It's a fixed term no matter what. It's not like a credit card. If you have a $10,000 balance, um, and you pay some balance down, the payment is going to change. But personal loan, installment loan, it's going to remain the same throughout the life of the term. So just keep that in mind. I don't recommend it. I only recommend it if you're, again, trying to consolidate some debt, credit card debt, get a fixed payment, lower your interest, and then that way you can pay it off. You're trying to consolidate the debt. You're not trying to create debt. Guys, don't forget to subscribe. Hit that bell notification. That way you get notified whenever I post a new video. Also, smash that like button. Smash that like button. It does help get the algorithm moving and getting this video to other people. That's my time. My name is Toby Rosario. Peace.